stocks are down. Has us wondering if the OPEC production cuts are re-inflating the inflation worries. Stacey Morris joins us from Alerian, Director of Research at a very energy-focused business. Stacey, how surprising was this decision by OPEC Plus?
Well, Oliver, it wasn't as surprising on Monday or Tuesday before the Wednesday meeting, but if you had asked me a week ago if I thought they were going to cut by 2 million barrels per day, I would have said no. So as we got closer to the meeting, the expectations for the size of the cut got bigger and bigger. But I think what's important for people to realize is that the headline cut is 2 million barrels per day. That's versus a quota that many of these countries are already underproducing against. So the cut in effect is really closer to around 1 million barrels per day, maybe even less. But I think there's some misunderstanding in general just about the overall size of the cut and what it means for oil markets.
So what's that misunderstanding? Where do you think people are going off course?
Well, I think people get too focused on the 2 million barrels per day. It's really probably going to be around 1 million barrels per day and maybe even less. When you think about the global oil market, it's about 100 million barrels per day. So 2% of demand versus 1% of demand is a pretty big shift. But I think the other thing that people need to realize is that oil markets started pricing this in ahead of the meeting. So we saw oil gain about 10% just over the last couple of days. So we've already kind of seen this big move in reaction to the news. And now we're in a position where, this cut is priced in and, we're going to see what happens with demand going forward. That's really the big variable that people are worried about from an oil perspective. And that's, part of the reason OPEC cut, or the main reason OPEC cut, is that we're worried about demand as we see all these issues with the global economy. So demand is really going to be the factor to keep watching as we go through the next couple months.
Okay. Now, Stacey, what will determine where in that range of 1 million to 2? What's the where does the variance come from? What's the independent variable here?
Yeah, so it all just depends, on OPEC's execution and the group OPEC Plus's execution, I should say. How strict are countries with their targets? How much do they actually cut versus what they're supposed to cut? And because so many are underproducing, there's only a couple countries that are actually in a position where they would need to lower production to comply with this. So you think Saudi Arabia, the United Arab Emirates. So the actual size of the cut really depends on what OPEC countries do with their production, and that's what remains to be seen.
Okay. All right. So as it pertains to the stock market, generally, the oil producers, the drillers, have been much more resilient in their trading patterns than crude oil itself. As crude dropped $30, we've had some of the favorites in the oil group sitting near highs. Buffett's favorite, Oxy, is just barely below the record here. How do we explain that big gap when generally a chart of energy stocks versus the commodity has gotten quite a wide spread now in favor of the companies?
That's right, and it is kind of unusual to see this, and I think there's a couple of factors at play here. I think a big issue is the fact that energy companies have changed a lot. They're generating significant free cash flow. They're buying back their equity. They're offering attractive dividends. In the MLP space, we see yields stay at 7.4%. So the income from energy companies is very attractive, whether you're looking at MLPs, midstream, or even some exploration and production companies that have started to deploy variable dividends. So this kind of sea change in the energy space, I think, has made the space much more investable. These companies are focused on capital discipline, they're focused on returns, and they're delivering that in a market that's been, very difficult. So I think energy can continue to be a bright spot in a tough tape, even though we are probably going to see some more volatility in oil prices. I think for energy investors, the key takeaway from yesterday is that OPEC Plus is going to defend a floor for oil prices, and that's probably around $90 a barrel Brent. So I think for energy investors, the announcement yesterday gives a little more confidence and comfortability around the future for oil prices as you look at energy stocks. But I think that decoupling has more to do with strong fundamentals for these companies, free cash flow generation, providing returns. And then you could also argue that oil markets have become a little disconnected because of lower liquidity, lower volume. So I think those are some of the factors that are at play.
Is there anything It sounds like we're very supply focused in our conversation. Is there anything from the demand side that's moving the needle? I mean, it looks like this is so focused on production right now, even as there's this deep concern about recession. There's this deep concern about the stock market. But it looks like people are still filling up the cars. And the narrative, at least from what I can tell, doesn't seem like we're even discussing a demand drop-off in crude. And arguably the price action doesn't really suggest it. We're back at $90.
Yeah, I mean, from a demand perspective, if you look at the inventory report from yesterday, demand looks very strong for both gasoline and diesel, which is not necessarily what we've seen over the last couple of months, but it has been, very strong here lately. I think globally, a lot of the demand narrative is focused on China, and as it should be. The expectation is that Chinese demand is going to fall this year for the first time since 1990. And I think that's a huge deal that people don't appreciate. So even if we see some demand degradation from a slowing global economy, if Chinese demand starts to come back up, that can really offset that. So those are kind of the key variables to be watching from a demand perspective, besides just what's happening with recession risk. A lot of it has to do with what's going on in China and when they start to see more demand as COVID lockdowns unwind.
Great conversation, Stacey. Really appreciate you helping us get through the muck and figure out what's going on. Great stuff.
Thanks for having me.
Yeah, definitely. All right, some very important clarifications here on what that OPEC plus cut means and why stocks continue in the energy space to do so well even when crude is down.